Hello. Hey guys. Thanks, Scott. Hello, Andy.
Hey, Steve.
All
Hey,
right. I
Scott.
got my partner with me again. I was flying solo
Yeah,
last week when you were meeting Ralph Acampora in Minnesota.
that's right.
Name dropping your trade ideas, friends. All right. So hello, everybody. Thanks for letting us know you guys can see and hear. Welcome to the Trade of the Week webinar. Let's get started. Just a quick reminder. Um, if you have a question, you can type it in the questions box and Andy can answer that for you. Otherwise, I can help demonstrate it. But if you've got something that's kind of off topic, maybe hold it till the end when we get there. So the disclaimer slide here is same old, same old. Just reminding you guys that we're a software as a service provider or a content generating webinar here. Anything that you see or hear should not be considered investment advice. If you need investment advice tailored to you and your family, you better call the right people. We are not authorized to do that. So we're just going to go over a few trades and show some cool technology and have a good time. Coming up, there's animation in that slide, is the Trade Ideas Summit. Last year was good, but this year is going to, without a doubt, be much better. We've got a great lineup of speakers, including Dr. Brett Steinberger, who is the master of all psychology when it comes to the niche of trading mentality and trading psychology. So something you're definitely not going to want to miss. We do have a lot of repeat people who come in here, and it'd be great to meet some of you all in person. So here's the information for October 20th, Saturday in downtown San Diego, 35 stories above the beautiful city. We're going to have a full day chock full of a lot of great information, but the keynote there is Dr. Brett Steinberger, who's going to talk about trading psychology. We also have our friends Brian Shannon and JC Peretz. October 20th, mark your calendar. Let us know if you can make it. Okay, so again, this slide is always very important to remind people, we've been in business 14 years and there's many levels of knowledge and understanding and learning curve to the Trade Ideas platform. And we know it doesn't happen overnight. So we make a lot of ourselves available throughout the day in different forums, primarily the live trading room with Barry Anderson over here on the right. It's a screenshot of his live trading room. Best part about it is there's hundreds of people in there. They're very knowledgeable and the price is free. So free is a great price. We're giving a good run for the money of other rooms out there who are building up a business and charging 99 bucks a month. I believe we do just as good of a job, if not better. And Barry does a great job moderating the room, keeping everybody focused and helping people with trade ideas, technology when needed. So that's bell to bell, Monday through Friday in the live trading room. We have the afternoon webinars, such as you're attending right now with myself. They're 5 o'clock Eastern, Monday through Thursday. Yesterday, Andy filled in. Hopefully we'll have Jamie back again next Monday in the saddle, myself on Tuesdays with Trade of the Week. Wednesdays is Brad and Dan that kind of uncover the veil on what's coming next on future versions, hopefully, of Trade Ideas. And then Andy creates some really good content every Thursday for you guys at 5 p.m. Eastern. And then, of course, our Friday support session down there at the bottom is come one, come all, 3 hours, open content. You guys decide what we want to talk about and what we want to demonstrate. It's a great place for people who need some visual instruction. If you can just hang out until Friday support sessions, you come in and say the word and we'll demonstrate it for you within reason. And then the TI University rounds out the entire week of our content. This next slide indicates we've got 4 classes that start Monday of each week and finish on Thursday of each week. And then we finish off that Friday tech support forum, as I said, for 3 full hours. So a great way to come and learn in a structured environment, starting off with the beginners and getting more intermediate and then finishing off on advanced on Thursdays. The Trade Ideas University, you can sign up for that directly on our website under the support navigation tab. And all of that combined gives us a really nice net subscriber growth over the years, and we do thank you all for helping us do that. We couldn't do that without you. And so the theme for my week, as always, is no man is better than a machine, and no machine is better than a human with a machine. And that's Paul Tudor Jones, a fabulous wealth manager, hedge fund manager. And by the way, Dr. Brett Steinberger, who we're going to have as our keynote speaker in 2 months, was actually on the payroll of Paul Tudor Jones' hedge fund for a few years. He did a wonderful job getting the heads straight of all the managers involved in that fund. And I bet you he's got some great stories from that. But nonetheless, that's the theme of our Trade of the Week weekly address. no man is better than a machine, but we have a machine called Trade Ideas, and we also have AI and Holly, and we feel that when you combine that with a human being, the two mixed together is a perfect match. I spent a little time last week, I won't do it again this week, but talking about the oncology department and how IBM Watson, as an AI, artificial intelligence, went through machine learning and gave great tips to all of the oncologists and the researchers, things that they wouldn't have come up with themselves. But they're still not relying 100% on the machine to cure cancer. There's still a human element. So that's why I like to touch on this slide and remind people it's not all about the machine. It still is about the human element as well. And so today's agenda is very much regular, formatted, pretty much the same. We're going to market recap, and then Andy will talk about some of the things that happened in the AI Holly module today. Talk about the trade of the week and how it was derived and how it's doing, and maybe even check into last week. And that kind of dovetails into, again, I want to show the soon-to-come composite rating score. It's not available yet, and my intention was not to tease you, but to get you excited about what's coming down the pike, because the last two trade of the weeks have been derived from this excellent top list that Andy and some other guys that are just math whizzes have been working on. So we'll talk a little bit about that. And I've got an analogy when we get to it. It's kind of like betting at the track. One of the strategies I used to use, using those composite rating scores with another little secret thing that we'll talk about. And then last week, you recall, I did send you guys off with, I think, 8 price alerts, and I think they did pretty well. So we're going to revisit those, talk about them, and then I've got a list of some other new price alerts that we can mark up today, because as long as it's working, there's no point in not giving out some candy and some door prizes, as long as we're getting some good stuff. And that just dovetails right into where are we in the market recap. Well, we are at all-time highs, uncharted territory. There's really not much resistance above. We were in new all-time highs, uncharted territory again today, and we finished back off of our highs a little bit, but we can look left all we want. There are no resistance levels coming up, and there really is no bear case to be made of why this economy is faltering. I try not to get too involved in economic news or analysts or things like that, but we just did have our consumer confidence number that came out this morning. And the consumer confidence number is mirroring what we're seeing here for sure on the charts. As a matter of fact, the number was so high, we have not seen a consumer confidence number this high since pre-9/11. So we're going back 18 years to kind of catch the mood and the sentiment that the American public is in right now. They're employed, they're seeing their family members, their neighbors and their friends employed. Things are moving forward, and so it's no real surprise that the footprints in the sand, which we do like to concern ourselves with, are showing no signs of abating here. Typically a stock market is a forward-looking vehicle about 6 months out into the future, and as far as we can tell, the forward-looking market price action is telling us that even looking out 6 months, everything still seems to be pretty rosy out there. So there's absolutely no bear case to be made. The only thing I would suggest is that we got maybe a little ahead of ourselves here over the weekend, a nice big juicy gap. More than likely that might be filled at some point during this week's price action. And ideally, it might even be early and quickly on the open, a big move down and then a reversal. So the only thing I would watch out for is that we've gotten ahead of ourselves a little bit. Markets do need to breathe, 3 steps forward, 2 steps back. And it's a pretty big in-breath we had. So there's an exhale probably coming. And I'd be watching, I'm going to move this orange line up there. I'd be watching these levels of gap fill. Gaps were meant to be backed and filled. So that's what I'm seeing in the SPY. No bear case. Maybe it's got a little ahead of itself, might need a little breather. We'll see. Same thing going on over here in the NASDAQ. The Qs, for the most part, I'll just mark up that gap as well. The Qs have had 4 or 5 days of really good movement up into uncharted all-time high territories once again today, trading at all-time highs. But, 3 steps forward, 2 steps back, we could get a little tired and need a backing and filling. And if we back and fill this gap area, once again, down the road in a few days, it could become an easy higher low that we can point back to in time and say it's just a part and parcel of the structure of this wonderful uptrend and bull market we have. Saw another great quote today. More money has been lost trying to time a break in the market or trying to position yourself ahead of time before the market pulls back. That's a fool's game, guys. There's no reason to try and play that game until we start to get some red flags of warning, but not seeing anything so far. IWM, something interesting here, got nicely ahead of itself. Again, IWM yesterday was in uncharted territory, but threw in kind of a real big topping tail, but then reversed it today with a bottoming tail. Andy and I have affectionately called this the propeller hat. In the past, if you're looking down on the top of somebody, they got a propeller going one direction and a propeller going the other direction, and just kind of makes everybody look like a fool in the end because there's no real direction. There's just a lot of noise and elbows being thrown. So what looked like maybe a breather coming in the Russell 2000 IWM was quickly shored right back up today by the price action, not getting too far away. But still, all of these indices, and we'll end here with the Dow, they do need some sort of a breather. They've had a pretty good run, and I feel like that over the weekend gap that we had is probably a simple short-term target for a pullback and just hitting the reset button. Stocks and indexes, they don't go up in all green candles. You still have to have some red candles in there, and you still have to have some pullback and some noise. But as usual, sideways noise would be more welcome than too far of a pullback noise. But stock prices are lining up with what we're hearing and reading and seeing in the news on our economy. Stock market's a forward-looking vehicle. It's looking forward 6 months from now and saying it doesn't see any major issues at all. So that's kind of what I saw. Andy, did you see anything interesting?
Steve, yeah, you echoed pretty much my sentiments yesterday when I was going over the market recap. Yeah, there's just not a bearish case to be made. I know it's that time of the year when everything's kind of slow, but still, price pays and we are moving higher. And who knows? I mean, Steve's right. We could, that's textbook for to come back and fill that gap, right along where the breakout was or near it. And that we could definitely see that. Typically, when you do have a major breakout, they are retested in most cases, but that doesn't mean squat really.
Mm-hmm.
That 25 cents will get you a cup of coffee. So we don't, well, 25 cents won't get you a cup of coffee anymore, but
No.
You know what I'm saying.
Not a video game anymore.
Exactly. But no, I agree with you on all metrics there. I mean, it's just,
Well, that's interesting because I was not in the webinar yesterday. So without hearing what you said yesterday, we pretty much mirrored and echoed the same sentiments, didn't we?
We sure did, yes.
All right, good to know. That means that's some quality content there. All right, so that's it for the market recap. There is no bear case to be made. Just be on the lookout for the market taking a breath and for, nothing goes straight up forever. So, All right, Andy, if you want to take the screen, if not, I'll keep it here. What do you want to do?
I'll go ahead and take it. It makes it a lot easier.
Okay. So we'll do the Holly recap, and Andy's going to point out a few things of interest that he caught today.
Yeah, let's take a look at Holly. I mean, let's take a look go back to the spiders. This is what she had to work with today. We did have a gap up. The majority of the strategies that made the cut today, in other words, who came to the party, who scored well enough last night after being back tested over and over, that's how they make the starting lineup the next day. Well, a majority of them, were short, but I did notice some shorts. I'm sorry, most of them were long, but I did notice some shorts sprinkled in there on each strategy. And if you look throughout the day, she did fire off kind of a mixed bag of both long and short. You look at the spiders, we had a gap up, pretty sloppy action. We ended up, finishing up, let's call it flat. It's a flat day after a gap up. So very, very sloppy, slightly downward pin action a day, and it makes for a tough day. I don't care what kind of strategy you're trying to apply to the markets and Qs. Pretty much the same stuff there. You can see the little spinning top there in the Qs. We'll have to watch that. A lot of times that could be a short-term reversal or even a long-term reversal, but we're not going to go there because everything looks bullish right now. But yeah, keep an eye on little patterns like that. They can develop into a potential reversal if you take out that low. So I didn't mean to get back into market recap, but I just wanted to go over it to show you what Holly had to work with. And man, all things being equal, it's not bad today. But I do want to point out, if you look at this is Holly 2.0. she scored very well on risk off, which means taking Holly's exits is what worked today, not holding on. You can see on risk on, she was only up 39 cents. You know, after the fact, you show me a tape like this, I'm going to probably say that's a risk off day, and I think Steve would agree with me. It's just there's no trend. There's no trend either way. But all that being said, we go over here to Holly Neo, and you're going to see that risk on was the was the leader of the day. Risk off, only up 33 cents. So man, that makes it tough. Okay, guys, because there's no way you know in a market like this, you're not going to be holding on to a lot of these trades. But that doesn't mean you can't look at stocks individual. I'm going to show you a couple of trades here today, which I know a lot of you guys think Holly has the advantage because she's always first in. There may be some slippage, but I'm going to show you where you have the advantage. And this is where you as a man can take an alert from a machine such as Holly and do so much more with it. And I'm going to stroll down here to one of the losers on risk off, and that's LOGM. But I want to show you this chart here. And you as a human should be able to manage this a lot better than Holly did. And so here's the chart. There's the trigger, okay, at 83.53. I find it hard to figure out how she even lost 23 cents on risk off in this pattern. But it was probably a jig down. Let's look at the time here. Let's work through this together. Okay, so it's basically a 16-minute hold. So here was the trigger. So she probably got out on some little, dart, down right there. But anyway, a 23-cent loser on an $83 stock, guys. We're talking about 0.2% loser. That is, this is where you can come in. It's profit say, but this was really, the algos sometimes get these mixed up. It's really reduced risk since it was a loss on the day. But if you're looking at a chart like this, guys, this is where you can, do so much better, even in risk off mode. If you see Holly get out, you're not gonna, you shouldn't be taking such small losers on an $85 stock, $84 stock. And I just want to point that out, because when Holly gets out, doesn't mean necessarily that you have to get out with her. If everything's still working, the pattern's still sloping from the lower left to the upper right, holding that fast line, which Steve always points out so beautifully. Look at that. So a lot of things were still intact here, and this is where you as a human trader can say, you know what, I'm going to get my stop a little bit lower than this. Maybe I use the 83.05 stop. Even that's only probably, oh gosh, what is it? I'm not going to figure it out, but it's still a very marginal stop for an $84 stock. So anyway, I wanted to point that out, guys. When you see something like this and it's still holding its fast line, everything's moving correctly, stick with something like that. And when Holly gets out, because you can see the risk on trade, was over $1.18. Another one was right above it, and this was a short, GCal. And once again, there is your trigger on this candle right here. I never saw a bar reversal. Everything's still intact, and this is a little more volatile of a stock. But nonetheless, Holly gets out for a 21-cent loser, and yet the trade just continued to work, really, really well. Even risk on, up 41 cents. So I kind of wanted to point that out, guys. This is where you have the advantage over Holly. You hear Jamie say it all the time. Holly's not great at, she's great at entries, but she's not, she doesn't have all the eyes that we can see as a trade is forming in the market, and all the variables in the market that we can, we can look at, the spies, the sectors, et cetera, et cetera. She'll get there. She is artificial intelligence, and she is learning more and more every day. But at this point, you're much better at managing a trade than Holly is. That's why the gray box is so effective in a lot of these trading floors. They know the machine can find the entry, but they know the human. Thus, a gray box versus a black box is better at managing the trade. But Steve, other than that, it was it was a pretty good day, but nothing nothing to write home about. Holly Neal was the best performer. But once again, that's on risk on, and look at the the downdrafts in this thing.
Right.
So if you did try to go to risk on, it got kind of hairy at times. To me, Holly 0.20 was more impressive. Just if looking at risk off, up $1.63, even though Holly Neal was at more. This is the kind of stuff I want to see. A nice little move higher and then just kind of trade sideways in risk off mode.
Yeah, it's nothing like Holly was last Tuesday when I was presenting the day for you all. I think it was a record-setting day. Each bucket was up just an enormous amount. But what was different about that day was that we had a definite directional bias, long, all day long, go long, long, long. We also had a definitive risk-on bias. It wasn't no risk on, back to risk off, close it. I mean, it was open and just go all day. So if you guys recall what last Tuesday looked like, today's different because we couldn't really definitively look down and say, well, risk on's the order of the day because all three segments are participating in risk on. And we couldn't say long is the best order of the day because all three segments were not participating in long. Basically had a bit of a mixed bag today. So, it's kind of hard to deduce any bigger themed patterns showing up, but nonetheless, still a green day across the board, it looks like.
All right, Steve, I'll send it back over to you if you're ready.
Sure, go ahead.
All righty.
And when you do, you'll notice something new on my screen, everybody. This is the composite rating. I'll come back to that in a second because we're going to use that a bit going forward for a minute and talk about it for a little bit. Let's see. All right, so the price alerts. All right, I've got these right here, and these were the ones that were given out last Tuesday, and he was on the road. Not bad. They were all longs, of course. Beautiful trade desk trigger. Look at that moving average there, holding that price and pushing it through higher, even after we talked about it on the trigger and follow through. Really nice trade there. AMD, probably the best of the bunch. That thing had a banner week last week, and I'm just happy to say that we served this up to you guys before that move even occurred. So hopefully there was some participation out there and some of these good ones. Cool, another one trading through, still looking for highs over there. And then we're starting to get back down to, still $2 in the money on Roku, but these two are kind of bringing up the rear. That one triggered back here 5 days ago, and I think this one was a day. Yeah, these two downtrenders can just kind of show you. TSRO, it's in the money, but barely. I mean, 20 cents, not doing a whole lot. And then BPOP, the one that actually didn't work as well as the rest of them, was in an uptrend, but it just couldn't push through. And so it did the old trigger by a penny there and then pulled back. But, if we take a look at the aggregate sum totals, these are percents. So we got roughly 30%, 42, 43% minus 2. That's about a net 40% out of 8 stocks that we sent out. 7 of them triggered. 1 of them didn't, and only 1 out of the 7 that triggered didn't produce a whole lot of alpha. So those symbols last week were derived and curated by myself, going through the Holly segments at the end of the day and seeing if anything stands out to me. And then I'll drag this guy over here and talk about it a little bit. Also going through our composite rating. Now, this is not something that's quite available yet, but the accolades really do go to Andy and Dave and Michael behind the scenes over here at Trade Ideas. If we go to configure, you'll notice I have a filter called U14, and there is about 10 data points of special sauce in here. We're talking fundamental data, debt, earnings, and technical scores on the charts, technical. So fundamentally and technically, we've created
15. About 15.
What's that?
About like more 15? Like 15. Yeah, 15 data points.
Yeah, I was guessing. Andy speaks the truth. And again, it's some fundamental stuff, some earnings stuff, and some technical stuff, all put together. I think we might start running circles around the IBD composite power rankings here pretty soon. So As it stands now, guys, it's not quite available. I'm hoping in 10 to 14 days we'll have something that'll be a bona fide filter, because as you can see, it's a U14, which means this was created by the guys and shared with me as a custom formula. And it's not really efficient or a great idea to give out the custom formula. We're going to wait until we have this built as a complete filter that you can go in and search for and just type it in and start using it. And by the way, in which it's used, we have a minimum score of 90%. I think the lowest score possible is a 30, right, Andy? Is that correct?
Correct.
Okay,
Correct.
and the highest possible score would be 100. Is that correct?
That's correct.
So what we're doing is we're taking our composite score. I sound like a deposition.
Yeah, you do.
Make sure you please speak clearly to the stenographer, Mr. Lindelof. Composite score that we're using here is a cutoff of 90%. So we're getting rid of the stuff that doesn't score well, and we're only focusing on the good stuff. And that's really it. But what I've done is I've taken it a step further, and I kind of teased earlier with just like going at the track. So one of my favorite racetrack, horse racing track ideas is to go and get the program and look at the early morning line and find out what the smart people thought the early morning line would be, 3 to 1, 4 to 1. But then at the end of the day, when we get close to the race, the smart guys, the handicappers that get paid to publish this stuff, they thought the horse was a 3 to 1 or a 4 to 1 long shot. Well, if the public all of a sudden is missing something and they've got it at 8 to 1 or 9 to 1, guess who I'm going to side with, the public or the smart guys that wrote the early morning line? I'm probably going to side with the guys who wrote the early morning line, and I'm going to take the gift of the 7 and 8 1 odds, because the public is obviously missing something. And that's kind of the key word I want to transcribe here to my thinking. So you guys know that I have my squeeze me list, which is looking for stocks at 52-week highs. Maybe some of those stocks aren't as healthy as they could be. Well, this new composite rating score is making up for that. So these are stocks that are not only strong on the daily, I'm going to start clicking into them here, but they're also strong on the balance sheet, and they're also strong in fundamentals. People are missing something about them that are short, and that's the operative word here. So I've kind of taken my squeeze me to the next level. You'll notice that I've got some nifty gradient colors here. If I go and right click this top list and we take a look at what I'm doing, oops, that's cloud. Let's try that again. Properties and colors. Notice on the right hand side, I have highlighted short float. So I'm only interested in sorting these items by, again, who missed the bigger picture. The afternoon people didn't quite miss what's going on there, is that these stocks might be healthier than they thought, but I'm sorting them by who has the biggest short float. So these guys up here are 30, 40, 50, 60% short float in the dark colors. So somebody's missed something, all right? The price action is going really well, but somebody's a group of people are being very stubborn in there in not getting out of their shorts, or maybe they're in the process of like this iRobot. This is probably a pretty good short squeeze happening right here. So just to kind of backtrack, I'm taking my squeeze me scan to the next level. I'm replacing it with a position in a 52-week range to assigning the composite value score to it. So now not only are these things healthy on the daily, they're healthy on the balance sheet, and I can get a really good curated list of who's who, and then I can come through and I can sort by the short float, and the ones that are near the top are more interesting. And as usual, I would not chase a stock like iRobot. You got 9 or 10 days of green candles. You're just asking to be the one guy who buys and is the red candle the next day. So this is my starting point. And again, this is going to be available hopefully in a week or two for everybody else. And I will be happy, more than happy, to just click and save or share, but I can't do it right now because the composite rating score, which is the entire meat of the scan, is made up of a custom formula, which everybody doesn't have, and it would be really time consuming and not efficient to try and do that for everybody. So we're going to wait until we get the bona fide filter into our library, and then we can kind of go from there. So that being said,
not only that, Steve, our secret sauce would be out too if somebody could read that custom formula, and I'm sure there's some guys. Yeah. We
don't want that.
No.
And I just realized I kind of skipped ahead because I was so excited about showing this, and also showing how good those 8 custom cloud scans were that I gave out. So we'll come back to that because we technically did skip the trade of the week. However, it's a good dovetail, because the last 2 weeks, guys, guess where we found the trade of the week? This thing right here. All right, so last week was TCMD, which I believe is probably still on here.
I see it right there at 98. There you go.
98, TCMD, okay, click, and there we go. This was 2 weeks ago. Our signal candle was basically right here on the close of that day, buy the stock on the open the next day. way above our moving averages. It's not pulling back. It's just going sideways. Everything's looking good. And guess what, everybody? TCMD is at all-time highs as well. There's no resistance. So this thing is kind of mirroring the markets. If there is a early morning pull down, it could come down to this daily line, the 10-period moving average, and just try and shake the trees a little bit and see what happens. But ideally, it would pop back up if that ever does happen. So TCMD from last week is doing just fine. And then coming into this week, and the content on the email describes, stay with what's working, go back to the same well until it stops working. Here is our trade of the week this week. WWE also has a 98% composite score. And what I was seeing over the weekend was this wedge, the bottoming wedge down here and the top wedge coming down. And it's, you know, the entry point wasn't necessarily so linear above a above a horizontal horizon. It was basically breaking out on Friday. That little green shoot was closing and showing us a confirmation of the closing of this wedge. That's all we really needed to see. Therefore, the instructions on the trade of the week were buy on the open on Monday. And depending upon where you got your price, it doesn't matter, because where the close is today, it should be above that price. Lastly, recall that last week I kind of went into a bit of a sermon as to why we're not going to put in a to the penny price stop anymore. There's no point in setting up the algorithms and high frequency traders out there with a nice bowling pin setup that they can roll into. So we're on our own now. The trade of the week's getting kind of big, and I just think that they're starting to put some gamesmanship on that, and I didn't care for that. So the suggested stop, as I said in the content of the email, is always the first thing is to look at the swing stop on the exit here on our chart. And also, what I would probably be more interested in is this blue line, this ascending 50-day moving average is really repelling the price. It hasn't even gotten near to it. So I would be watching these levels down here for any sort of a stop. The stock may be on what they call a $100 roll. Once it gets in the neighborhood of the high 80s and $90, stocks like to just have a gravitational pull up to the $100 level. So I think we made it. I think the upside target for this was just under 100. So doing it that. All right, I see WWE as the #1 stock on the IBD today. So the composite, you know, it's going to be.
You mind if I address this, Steve?
Please go ahead. Andy's the one to address this.
Yes, and the reason I do it because I'm running a comparison of the two, and obviously their secret sauce is a secret as well. So I have no idea what they are using, but I can tell you this: I have been monitoring what their scores versus our scores, and I will say this: they put a little more emphasis on recent earnings, probably a little more fundamental data. We're more technical. They probably go a little more fundamental than we do. I noticed a lot of stocks in their IBD 50 are, I mean, technically looking like they're about to break down. And I used to be a subscriber for a long time when I was trading for this hedge fund for a while. And I honestly believe, you know, ours is going to be, or is better, just because it has a little more technical emphasis, and you'll see, like when Facebook, for example, that stock went from like you know, close to 100 to all of a sudden down below 50 when it had a bad you know, instantaneously overnight, just because on those bad earnings. And whereas IBD, I'm sure they kept their score, you know, because, and once again, it's a lot of fundamentals involved there. But anyway, no, it's not similar. You're going to see some good scores, obviously, when a stock like WWE is going to get a good score on both of us. Apple is going to get a good score. There are certain things that are pretty obvious, but there's also some big contradictions. All right, thanks, Steve.
Yeah, well said. Yeah, that's probably how I would have answered it too. Knowing Andy, I know he probably would have given more weighting to the technical aspect versus what was their recent earnings. You know, the stock technical is going to reflect the sentiment of those earnings. All right, so that is that was the genesis and the discovery vehicle for those two particular trades. We'll see what this week certainly brings, but I wanted to show you how, you know, these people up here, 70, 60, 50, 30% short the float, they're missing something, all right? So we're gonna hopefully exploit the naivete of these short sellers up here that are stubbornly staying short some very impressive stocks with big scores, not just on the chart, but also on the balance sheet as well. All right, so I'm gonna minimize that guy. So we already did go through and just kind of quickly, briefly touch on what happened last week. So let's clear these out. and we'll finish up today. Probably go about 10, 15 more minutes here at the most. Let's delete these 8 selected and start fresh. And I will hand these out just like last week. And hopefully a few of these will be decent ideas for those that are looking for something that might trigger during the week. So the first 5 I've got from Holly. I don't have the segments, but they were all trading in Holly at some point today, and they showed up on the end of the day traded list. So the first one was MTCH, short float. I always got one keen eye on this guy over here, guys. You know, short float 49%. Giant gap up from earnings probably, yep, 14, 15 days ago, and couldn't give much back. Look at my 10-period moving average, caught the pullback after the earnings gap up, held the price, went sideways, held the price again, now the price is pushing higher. Kind of a little mini cup and handle happening after here, which is the gap up, and the pullback showed that it had no interest in filling the gap, at least for now. So this was brought to my attention today by Holly. I'm going to look at yesterday's high, and we're going to put an alert above this, and know in the back of our mind we're going to add the short float to our notes without a doubt. So 52.12, we'll go 52.13, found on Holly, but the story here is this, the way the chart looks, with 59% short the float, and there's only 65 million in the total float. So that is our notes for that one. Could be a nice short squeeze if we want to push through that level. And there it shows up as our first working price alert. So we got 7 more. The next one, and he's going to probably chuckle on this one, because typically these types of stocks, they have their day and then they go and they die. This one looks like it wants to come back. Oops. AWX actually closed a little weaker than I thought today, but this thing was trying. I mean, this thing, if we zoom in just a little bit here, here's a gap probably off of earnings. Yes, okay, the pullback. Couldn't quite fully fill the gap, but hit the pivot level. Now it's been going sideways, one little hitch down here, tried to run the stops, couldn't get it. Now we got some lower highs starting to creep higher. This thing might come back to life. And typically, you know, things that had these big moves back here don't come back to life, but I thought it was interesting enough. We might as well just sprinkle this list of 8 that I'm going to give you with at least one super volatile guy. Why not, right?
Sure.
All right, so let's just go in and put in the high of today. I think that might be the better way to do it and try and catch a momentum move rather than pull back. So the high of today is essentially 550. We'll go 551. Is there any major short float? No, there's 50% short float. How about that? So we'll go 551. This was located from Holly. Short float percent is 50, and it could find second life. We don't know, but we're gonna at least mark it up.
Write that in the notes.
No,
we don't know.
We don't know, but there's that. All right, LFVN, Leviathan, that's for lack of a better word. LFVN. Okay, this was also located off of Holly today. Really nice. And this was probably earnings back here, I'm going to guess. Yep, about 8 days ago, a big slide through highs and then an absolute horrible reversal the same day. A couple more days to squeeze out the weak hands after earnings, and now we're coming back for more and pulled back yesterday. We traded below the 10-period moving average, popped back up. But I like these little shallow 4 red candle pullbacks here on a stock that's looking healthy to begin with. Matter of fact, I'm going to go one step even. I'm not going to do the all-time 52-week high back here. I'm going to use one of these highs because that's where the most recent level of resistance was. So 1180, we'll go 1181. Nailed it. Is there any shorts? The float is nope. No big short squeeze there. So this is just Holly, and that's it. Early warning to new 52-week highs because I didn't draw it off the old 52-week highs. So that one looked interesting to me. All right, there's the third one, TLRD. Oops, TLRD. All right, so this one's skipping along the bottom. This is a little different pick. This one has not been moving higher. It certainly would not be on the composite score, but it's telling us technically the damage has been done from this gap down way back here. We've got kind of an inverted head and shoulders bottom, a little higher low there, and then a little possible higher low here. 4 or 5 days of sliding sideways. This has got kind of the looks of an interesting base build, and we do have the short float of 37% to maybe help drive the price at least a day or two if it does squeak higher. So on this one, I'm going to just go ahead and use that candle right there. It's the most recent 5-day resistance. 2293 is going to be our number. 2293 found on Holly and has 37% short the float. Base reversal. And there's that one. All right, the last one that we got from Holly is AEO, and this is just going to be a simple, nice trending, but 3 or 4 day pullback. Beautiful close right there, resting on the 20. We went below it on the open today, and then sold, bought right back. Perfect uptrend. Got a little ahead of itself up here. Look at these 2 blow-off candles. Needed to blow some steam off, kind of like what I'm saying the market needs to do right now. Had a nice deep pullback of 3 or 4 days and bounced. Now we're resting right at that 20-day, which was held yesterday. We tested it intraday, but closed above it. So we tested it today and held above it today as well. I think that's a decent looking buy the dip type entry. So we'll use today's high of 27.54. We'll go 27.55. And is there any short float on this one?
Sure, there is.
Only 11%. Only 11%. But
no, I'm seeing 32. Oh, that's the growth. Okay, I'm sorry. Sorry. My bad.
Wholly short 11%. Barely even worth noticing. Matter of fact, I don't even like to talk about short floats and for under 15%. So we're just going to leave that. Wholly short, BTFD type alert here. All right, so that's it for the ones. Okay, this must be trading higher after hours, and it is 27.63. There it is right there. That green tag shows me I don't even have to pull it up. Let's do this. It might not trade much higher than that. Let's see if we can set it just a little bit higher and still get it to trigger for us tomorrow. Let's delete that price alert, and let's go to 27.67, 3 cents higher than the current aftermarket price.
It looks like it has earnings tomorrow morning, so I wonder if that.
We didn't catch that. You know what? We're gonna dismiss this one. Forget it. We're not gonna do anything with earnings coming up. That one slipped through the cracks. We don't need that. All right. So hey, Raphael, I see your question. We don't do forex. We're only doing U.S. and some Canadian stocks in the equities market. Unfortunately, no futures or no forex. All right. So I just set 4 alerts that I found from the AI today. We're gonna have 3 more that I found from the credit rating, the composite rating, and I'm gonna delete one of those. We need to have 2. And these are the ones I found from the composite rating. So the first one being AYX. Whoops, I need to go to a chart. AYX. All right, really nice sideways movement. I'll guess this was probably earnings. Yep, 13 days ago, earnings up, gap not even close to being filled. Tried to roll over here, buyers stepped in, very strong. Short float 24%. Worth noting, they're missing something. All right, if this thing's on the composite rating, and they're still got 24% short on a beautiful looking chart like this, they need to have their heads examined. This is without a doubt one we're going to mark up, which is higher.
Yeah, and while he's doing that, guys, look at the similarities to that one at AMD. If you pull up AMD real quick, it's a very similar pattern here. You had a gap, you had a run up on earnings, and went sideways, and taken off. So very similar.
All right, so this one back here is actually the true high. We're going to use this. So 57.43, we'll go 44. 57.44. This was on the CR top list, and also happens to have 24% short float. Yeah, beautiful chart. Happy to save that one and not have it trigger after hours. Okay, the next, we've got 2 more to go that I basically found from the composite rating score, AJRD. Again, probably earnings way back here, gapped up and sideways, never pulled back. Secondary nice push, still moving sideways. short float notable at 23%. There's no reason that there should be 23% people short a very nice composite rating score that's showing great revenues, very low debt. Obviously, we know that because it wouldn't be on that composite rating score. So this one I'm going to do a little different like the other one. I'm not going to go back to the prior high. I'm going to show that that day there and that day there seem to have some good selling. So if we can just get above these two bars, we'll have a nice head start maybe at the 52-week highs. So the high is 37.15. We'll go 37.16. And short float 23%. First, I'm going to say where I found a composite rating. Top list, find 23%, still short this good chart. All right, there's another one. The last working alert coming through is ERI. All right, another nice trending stock, ERI, only 15% short the float, notable. But here we're also going to do maybe a little pullback buy, all right? Definitely good volume kicking in back here, probably earnings for the most part. Actually, no, looks like earnings were way back here. But something kicked in with nice volume, pushed it higher, consolidation, moving higher. Now we've got a stock that's trending on good recent volume. 2 days of pullback, bounced right into my 10-period moving average and gave us kind of a little bottoming wick there. I'm just going to go with the high of today's candle and see if this thing can continue on its way. So it'd be 49.01 is what we want. 49.01, and this was also from the composite rating top list scan with 15, just barely notable 15% short, but pullback in place. Looking for bar reversal on today's candle. And that's 7 ideas that I came up with today. Oh, big question, but looks like Andy answered it. Okay. I'm going to now copy, highlight, and copy and share these 7 alerts. Waiting for there it is. Copy all. Now what I'm going to do is highlight your attention, everybody, to the chat window in the GoToWebinar floating toolbar there. I'm going to type in this week's price alerts in cloud and control paste. Anybody wants to add those alerts that we just set, and we went over them individually to kind of understand the whys and the hows. These are all now working alerts and set for next week. And hopefully we can have another good conversation next Tuesday like we had this Tuesday. All right, you're welcome, Waleed. You're welcome, Ame. Andy, you got the other question answered from him? Okay. Okay, good to know. All right, well, that's what we've got for you all today. That's our prepared remarks. Thanks for the nice comments, Waleed and everybody. I'm going to turn it back over to Scott now, and he's got a few items of interest that you might want to know about before we head out.
Yeah.
All right, Scott.
Thank you. Right. So, we have a podcast, so you want to subscribe to that. Just search for Trade Ideas Podcast wherever you listen to your podcasts and hit the subscribe button next to it so you get the latest episode and you're ready for the next one that comes out. They typically come out on Fridays. Check out the catalog of past episodes. We've got some great guest ones. I think the last one we just released was actually from the archives, since we have some people on vacation. It was a great story where Dan interviews a young trader who's only 19, but he's got an interesting journey on how he, I think he turned several $100s into around 20K. I forget the exact number, but you can check out that story. It's a good one. We've also got an ebook that is very timely for what's been going on in the markets ever since February, trade-ideas.com/ebook. Steve and Andy both contributed chapters. It's 5 ways to win in a post-BTFD market, so it's got 5 strategies you should just have in your trader's toolbox. Download that by going to that website and entering your email address into it on that landing page. We have a event coming up in October. We're currently letting everyone know it's going to be better and bigger than last year. We've got some really kind of A-list speakers, including Dr. Brett Steinberger, who's really a trainer of traders. He's a clinical psychologist for traders, and he's very published, very revered. Brian Shannon from Alpha Trends, JC Parrots from All-Star Charts, they're all going to speak. We've also got some additional speakers there. Check it out at TradeIdeasEvent.com, and if you can make it to San Diego, get your ticket. We have a code that's good this August, August Alpha, all caps. Use it just like you see it on your screen for 15% off your first month or year of trade ideas. You can also use this this week to upgrade from standard to premium by using the upgrade path from logging in off of the homepage. However, we're going to change some of the upgrade stuff over the weekend, so if you're not using this code before then, it probably won't work by then for the upgrades, but it will today. So go ahead and take advantage of that to get premium. Any questions, email us, info@trade-ideas.com. You can also follow us on Facebook. Facebook.com/TradeIdeasPro is the Facebook profile to like, so you can see all our posts and share them with your friends. You can also find Steve on Twitter at StayTrader, and also follow the Trade Ideas handle, QuantBot, and some other ones. Thank you, Steve and Andy. We'll get the recording of this up later on, and send an email out as a reminder how to find it. Thanks.
All right, thanks, guys. See you
Thank
next
you,
week.
guys. See you all on Thursday. Bye-bye.